Good morning and welcome to the webinar. My name is Rob Bilius. I'm a business development manager at Cornerstone. Today, I am joined by representatives from our new brand carrier, LifeSecure, John Cullen, and he will review their plans and services. First, we have a little bit of housekeeping. If you have any questions throughout the presentation, please type them in the question box and we will address them during the Q&A at the end of the presentation. My information is on the screen if you would like to get in contact with me. Don't forget to follow us on social media and subscribe to our weekly Monday Minute newsletter. We keep you in the know with any industry and Cornerstone updates and information. Contact your Cornerstone broker advisor if you are not currently subscribed. From downloadable social media images to customizable flyers, Cornerstone's Marketing Hub has what you need to start managing your marketing in-house. You can access the Marketing Hub through the Cornerstone Resource Center with your username and password. Please contact Jess Larkin at the email address below with any questions and concerns. Take advantage of Cornerstone's exclusive partnership with EB3 to put together your customized benefit booklets. This automated technology is specifically designed with employee benefit brokers in mind, with low monthly pricing, customizable color schemes, the ability to add your own PDF documents, wrap documents, and SPDs, and so on. Contact your Cornerstone representative for more information. And at this time, I'd like to pass it over to John Cullen.
All right, thanks so much, Rob. I appreciate it. Hope everybody can hear me okay. So LifeSecure, who's LifeSecure? Well, we're going to talk about that. Today we're going to talk about selling our products in the worksite and some simple steps to success. LifeSecure is owned by the largest health insurer in the state of Michigan. We're a subsidiary of. And so we have a national footprint, and we have developed a pretty good worksite presentation, worksite products and systems to do what we consider the most important thing, is to make things as simple as possible for the broker and for the end user. So all of our products are like a one decision point. There's not a lot of decisions that need to be made. It's pretty understandable that the more decisions an end user has to make a decision to buy something, the greater the risk is that they don't buy it. So our products have all been designed to be very simple for the broker, for the presenter, for the consultant, and also for the end user. So we're going to talk a little bit about what we're seeing in the market. I was sharing with Rob just yesterday. I was at an HR event in Toledo that talked about the importance of ancillary products into the worksite. That it had been in the past that one of the biggest challenges for an employer was how much his healthcare was going to be. And for many of you on the phone, you already know that discussion can be very tenuous at best. And it's a tough situation. Well, since COVID and everything else has changed, the employee challenge has become as big a challenge. Many companies can't even open up their doors for their allotted hours of operation, let alone be able to produce enough goods to meet their potential output and or sales, because they don't have enough people working there. So the challenge with employees and keeping employees and attracting new employees is one of the biggest challenges that employers are facing. So one of the suggestions, or one of the paths, has been to look at the ancillary products in the worksite and how can we bring something to our employees that's meaningful, that will matter to them. So we're going to talk a little bit about some of the concepts between that too. So some of our sweet spots, I mean, obviously blue collar type industries, mechanics, tire shops, cleaning companies, towing, plumbers, but also a lot of white collar groups, a lot of service industries, insurance agencies, dental offices are where people are doing manual labor. We're a good fit in sole proprietorships, small LLCs, partnerships, small mom and pop owned businesses. Our sweet spot for employee size is probably 100 and less. We can do over 100 with not a problem. but even in the smaller size groups, there's a lot of value and a lot of success there because you get to actually talk directly to the decision maker. In many large corporations, you're funneled through HR or somewhere else, and you don't get a chance to really have a business discussion with the owner and the person that's making the decision, and that makes it tough. But when you get to that 100, 200 and less, you generally are going to get to talk to somebody. And the person you're going to talk to actually is an owner who realizes how important this employee retention and attraction is, let alone the effect it has on the overall business. So they're very in tune with what happens with their employees, and that makes a good conversation. So that's what's going on. Then the most sought after product in the worksite ancillary right now is accident insurance, is what we've seen. So an employer says yes to you, now what? Well, then you would contact, like for myself, I'm a senior regional consultant for LifeSecure. I manage distribution partners in 14 states. So you contact me and we talk about what we can do. We have a step-by-step selling of a worksite case process, develop a marketing plan, and then execute the plan. So that's generally what works. When you're post-enrollment, what to expect is a step-by-step guide for after enrollment, billing and payroll deductions, and direct billing from policyholders, welcome kits, how to establish a plan for the employer with new hires. We have all this set up. So for LifeSecure, we have a whole department that does nothing but worksite enrollments and worksite support. So generally, in most cases, if you're going to work with us and you get a case and it's with the XYZ company, once it's been decided that this is what we would like to do, then you contact me and we pull in our worksite team, and they will have a conversation with you, the broker, to go over, okay, what do you need to make this happen? And I'll highlight some of the things that are available to you later. We have tons of resources that are pre-done that will make your life exceptionally easy, very clear, concise communication points that we have. We'll work with that. Also have a conversation with your key contact at the facility, wherever the case is going to be launched, to make sure that billing is understood, how things are done, how, just across every T and dot every I. So there is no question about how things work, how to be rolled out, how to be followed up with, and the support thereafter. So we put a lot of time into that. I consider myself a worksite expert because I worked in a different field and developed communication points for employers on different products, and I had large success with that on a national level. So I understand there's a system, and if we could keep the system simple and clear and concise, we can really make these rollouts pretty good. So let's talk about our portfolio. So what's available to you from a worksite position are our accident, critical illness, and hospital recovery plans. Those are all available to a direct consumer model, but they're also available in the worksite as a payroll deducted guaranteed issue product. Also is our worksite long-term care, which is traditional long-term care, only available in the worksite, not available to a direct-to-consumer. And then our other two products that we have available through a national partnership with the Lumico Life Insurance Company is direct-to-consumer term life and final expense. But today we're talking about the worksite. So you have hospital, indemnity, critical illness, accident, and long-term care, which are all available and available to be marketed. So, creating better health solutions with these plans, it kind of gives you this just a rough idea of where things are at. Folks that don't have an insurance, I'll give an example. I was at a local Subway. I saw the owner was working. I asked him, I said, hey, what are you doing here? He goes, I can't get enough workers. I said, oh, wow. And he's making my sub. So I decided to start quizzing him, and I asked him some questions. I said, so do you provide any health benefits? No, we don't. I said, do you think that's something that would help your employees want to stay? He goes, I would hope so. I said, if I could show you how you could add, some ancillary coverages, whether it's accident, hospital, or critical illness coverages for about $20 a month per employee, would that be something that you would like to do? He says, yeah, I'm very interested in that. I said, why? He said, because it's a fixed cost. He said, we can't keep raising wages, because when we raise $1 wage, it also becomes a $1 tax and $1 of this we have to add and this and that. And he goes, it's not $1, it's 2 or 3 or 4. So therefore, that's more of a controllable cost and how we can actually bring a solution to our customers, because if they don't have health insurance, and they have an unexpected event, having an accident plan, having a hospital plan, having a critical illness plan could financially save his customers, which are his employees, from financial crisis. So there's a lot of folks out there that don't have that. Then the short-term medical catastrophic situation, bronze and silver plans, they have considerable financial exposure, out-of-pocket expenses. And then those that have great coverage, they still are looking at these products because they want to go ahead and transfer the risk for pennies on the dollar, which is keeping more money in the bank and protects the monthly income especially for Medicare type members. So there is a different value for each segment of this group. Okay. But for most employers, they have to understand, and they do understand, that their employees are primarily living paycheck to paycheck. I think it was stated that, what was the number? I think it was in the low 70s, 72, 73% of Americans are living paycheck to paycheck. Well, that doesn't mean they're poor. That just means that their pay is allocated. Their pay is allocated towards retirement savings through, debts, whether it's reoccurring debt of a car or a house or an investment or something, along with lifestyle changes. So most people don't have a lot of cash laying around. So being in a high deductible element, most employees, if you ask them, did they feel that they're in a high deductible healthcare plan, they're probably going to say yes. Because whether it's $1,000, $3,000, or $5,000, they're going to say it's high, because that is going to be an expense to them that they're concerned about. Well, when you don't have extra cash laying around to pay for an unexpected event, it can cause some financial crisis. So the goal with these ancillary products is to make sure that if somebody has a health condition that's unexpectedly presented itself, either through an accident, hospital stay, or acquiring an illness, is to make sure they don't have a financial crisis at the same time. Of course, we all know that deductibles are rising and rising and rising in order for employers to keep up with the financial challenge. So therefore, it's important. So I'm going to give you a brief on the products. Okay, the first one is our accident plan. Our accident plan is probably considered a flagship product. And right now, this accident plan by LIMRA is ranked as the number 3 selling accident plan in the country. Now they do that, based on individual sales. So why would it be number 3? Well, I'll tell you the reason it's number 3 is because of how it pays out. Now you got to remember that LifeSecure, even though we're a national company and owned by the largest health insurer in Michigan, we don't really spend a lot of marketing dollars on the product. So if we're number 3, and that's all because of our distribution partners, that tells you that our distribution partners are entirely bought into this product. And so that's why it's number 3. Okay, so here's the key points. It's guaranteed issue no matter what level, no matter who purchases it. The issue age is 18 to 74. It's guaranteed renewable at age 85. You can buy between $2,500 to $15,000 a year of annual coverage, or up to $25,000 for a couple or a family where different people on the product would share. You can add children on that product. Now, one of the other key facts with this product is that these are all unisex rates and they're composite, which means with this particular product, everybody in the organization that would get this product would pay the same amount. If you had 100 people and you wanted full coverage at $15,000, it's $43 a month. You do the math. There's a $0 deductible option, which is what most people choose. Other key points before I get into the reimbursement model, which is the key reason why this is such a good plan, is that LifeSecure does not we don't, with different companies, we don't coordinate with them. So what that means is everything that we do is in addition to. So if your health insurer is United Healthcare and they say, well, we're not a kind of company that would say, well, United Healthcare paid for that MRI. We're not. No, that's not the case. We don't coordinate with anyone. And everything is in addition to. In fact, we're a 24/7 benefits company for this product, which means if it's a workers' comp claim, you can still get your coverage taken care of. It's perfect for young families, active children, and it's a lump sum. Also, we have an accidental death coverage built in of $10,000 for an adult and $5,000 for children if someone dies within 90 days of an accident that they've had. So why this plan pays out differently is this. Most accident plans are a schedule of benefits delivery system. So if all of us on this call had a broken arm, no matter what the severity was, no matter what the cost was to fix it, we would all get reimbursed the exact same amount. So there's a line item that attributes to every single action. That happens. Now, I'm not making a judgment on that. It's just been industry standard for a very, very long time. So when LifeSecure developed this product, we decided, what can we do to make this different? So what we did is this product is priced accordingly and very competitive with all the other accident plans. Exceptionally, when you add additional members on it, the rates are by far top of the line item for that. But how it pays out is what's critical. So it pays out off the explanation of benefits. So everybody here knows what an EOB is. When the client gets their EOB, on the very left-hand side of it, it shows the gross charge by the doctors and the facility. So let's say it's $11,000 gross charge. The next number to the right is the customary acceptable amount that the insurer, let's use Anthem as an example, that Anthem says, hey, I know you want 11 grand, but we'll give you 9,000 for these services. That becomes customary and acceptable. The providers accept it. That's what pays them off. On the far right-hand side is the deductible and out-of-pocket for the end user. So with a LifeSecure accident plan, if I had a $15,000 annual plan and I had a $9,000 claim, I'm going to receive $9,000 tax-free cash directly from LifeSecure to myself as the policyholder of the accident plan. There's no strings attached. The end user, the policyholder, is not dictated in how they spend that money. They can spend it however they choose. We would all hope that they'd use it to pay deductibles and things, but they're not bound to. They can use it however they choose. So in many cases, you're seeing this reimbursement model off actual expenses pay out 50% or more than any other scheduled benefits company. So the end user, the employees, are getting a very rich benefit. Now, going back to my example, if I have a $15,000 annual coverage and I get $9,000 reimbursed to me, I have $6,000 more I can use between now and the end of the year. On January 1, it will reset back to $15,000. So in many cases, if you're working with an employer and their deductible is, $4,000, you start with that. Well, here's how much it would be for a $4,000 accident plan for your employees. This would make sure that if any of your employees have something happen, that this is a cost. Of course, you have total out-of-pocket costs too, so you can pivot to a point of affordability. Now, the employer might say, okay, I'll purchase this for my employees. So therefore, if they have a $4,000 deductible, they'll have $4,000 of accident. So then when you go to enroll them, the employees have the option to add family members, which is very inexpensive, or to adjust their coverage. So instead of 4,000, my total out of pocket is 10. How much is $10,000? Well, then you look at the number and then you sell that, provide that, and then there's split billing done so everybody knows who owes what and how it's taken care of. So this is our flagship product. We sell millions of dollars of this every year across the country. It is third in the country in individual sales, and the value is very deep. So it's the simplest accident plan. So simply put, the way you sell it is, what's your deductible? It's $4,000. Let's cost out $4,000 worth of accident to see what it would cost you to have that. Of course, again, you can add children on it up to the age of 26. Now, on the critical illness side, the critical illness program, I think, is exceptionally important. There's not an employer for a small group that doesn't know who in his employee group has had, they know everyone who's had a critical illness, either for themselves or someone in their family. Becomes very common knowledge because it affects everyone. So we have developed the critical illness plan and offer 3 options. Now, again, the accident plan is guaranteed issue any amount. The critical illness plan is guaranteed issue with minimal participation at $10,000. So we have 3 options, 10, 15, or 20. You can purchase any one, doesn't matter. But I will say this, if you have a $10,000 guaranteed issue product available to you and you choose not to take it because you'd like to have 15 or 20,000, you can. You just apply for it and you go through a simplified underwriting process. Now, in that case, if by chance we do some checking and find out that you don't qualify for the program, you can still default back to and get the $10,000 guaranteed issue plan. So I think that's a big issue when it comes to this particular product. Issue ages are 18 to 70. In California, it's different. The rates are unisex, individual unisex rates, but it is based on age and nicotine or non. Now, a couple things that this product has that I think are critically important, and I hope that many of you here have not had to deal with critical illnesses, but if you had, you know what I'm talking about. All right, first and foremost, this has a reoccurrence benefit. A reoccurrence benefit is not available in many products because it pays for additional reoccurrences of the same disease. Very typical might be cancer. I have a friend who has a plan. He has a $20,000 plan, and 8 years ago he got cancer. So he got checked for $8,000 for $20,000 8 years ago. 6 years later, it came back. So then he got the reoccurrence pays out 50% of the initial face amount. So he got another $10,000 6 years later. Well, here's what's happened with critical illness. It's important for everybody to know this, if not for your clients, but for yourself as an individual. And that is that healthcare technology is advancing at such a fast rate. In the 6 years between when he first got cancer to where it reoccurred, they were able to identify exactly what kind of cancer it was. And there was one place in the entire country that had developed a treatment for it. And it was at Johns Hopkins Hospital in Baltimore, Maryland. Well, the client lived in Jacksonville, Florida. So 32 visits later to Johns Hopkins in Baltimore from Jacksonville, Florida, he's in remission again. So that $10,000 he got with that reoccurrence helped fund all his trips for his treatment. So what we're finding out that whether it's MD Anderson in Houston or the Mayo Clinic in Minnesota or Cancer Treatment Center in Phoenix or Johns Hopkins or wherever, that not everybody has cancer treatments. So as they define these new strains of cancer and identify them, you're starting to see this become commonplace. So most people are going to travel to wherever they have to be able to get that done. So that's why this program is so important. This reoccurrence benefit would be very expensive to add on to a critical illness plan, and it's built in. Okay. So if you're treatment free for 1 year, and for 1 year for cancer is 1 year of no chemo or radiation, and it comes back, you would get that. You would get the reoccurrence of 50%. My example I gave you, my friend, is 58 years old. The chance of it coming back is probably pretty good. If it does, he'll get another $10,000. So that way he would have got $40,000. Now, the reason I'm bringing that up is because most critical illness plans have a cap on how much they'll pay out. Many cases, not all, but in many cases, they will not pay out more than 150% of the face value. So if somebody has a $20,000 critical illness plan with LifeSecure, the most companies would expect to pay out is $30,000, and after $30,000, it would be null and void and done. Well, in the case of the person I just shared with you, if it comes back again, he'll get another $10,000. That'd be at $40,000. So we don't limit how much we will pay out based on that particular benefit. Okay. So that's kind of how that works. We also have a subsequent diagnosis of a different disease, a span of 6 months. So if you have a bad year in January, you get cancer and get 20,000, and then in August you have a heart attack, that'd be another $20,000. We cover 9 specified diseases. That in that case, as long as there's 6 months between different diagnoses, you can claim. So that's why this program is so important. We do cover skin cancer as a one-time only payout. It's included in the covered conditions. Now, in the worksite, spouse coverage is 50% of the primary, and children are automatically covered at $2,500 each up to age 26. Okay. Now, the underwriting if you get guaranteed issue, the underwriting for a spouse, there is none. There's no underwriting. If you have guaranteed issue for the employees, it's guaranteed issue for the spouse. They only have to pass through a very liberal height and weight chart. So that's why, again, being able to get qualified for products is really kind of important. Now, this plan also has a return of premium benefit built in. If someone dies while your policy is in force, all your premiums less any benefits paid are returned to the beneficiary of the estate. And there's a health screening benefit of $50 per year per person, the total of 30 different procedures that qualify. And it doesn't apply in Michigan or Minnesota, but in every other state it does. So that's a critical illness plan. Finally, our hospital recovery plan is also a significant plan because of how it pays out. So it's a guaranteed renewable for life, no commission reduction at higher ages, which means once somebody gets this and it's $25 a month for a $200 a day plan, if they leave employment with all these plans, people can keep these. They just come off the list bill and then they're communicated to how do you want to continue with your coverage. People can keep it the rest of their life and trust me, if you get this and you're working age of 45 and it costs $25 a month to have this, you definitely want to keep it as you get older. It's a very, very big cost savings. There are some riders you can add on for ER and ambulance, major diagnostics, and rehabilitation facilities. It's ideal for clients with high deductibles. Again, as we addressed earlier, it doesn't matter what the deductible number is. Every employee looks at it as being high. Now, there's guaranteed issue opportunity, and there's simplified application with 4 health questions in most states. So the guaranteed issue opportunity is important, right? But if someone has to go into underwriting, their 4 health questions are only a 2-year look back period. And the height and weight chart is extremely liberal. I'm 5'8" and I could weigh 257 pounds. So therefore, that's why that works pretty well. Most people are going to get covered. But to get to guaranteed issue, it doesn't take much participation. We're going to review that in a second. The issue ages are 18 to 85. Now it's cash benefits for an inpatient hospitalization or care in an observation unit. So basically, you get up to 35 days of coverage with LifeSecure. And that's for every person that's on the plan. If I'm on the plan, my wife is on the plan, we both get 35 days of coverage. It is age banded and they're unisex rates. So if I'm 60 and my spouse is 50, together we're 110, our average age is 55, we both would pay the 50 to 59 group coverage. That's how that works. And we're compatible, all of our products are compatible with HSA plans. Okay, so that's the 3 products that we've focused on primarily. Now, benefit amounts for guaranteed issue. Accident plan, all levels. Critical illness, the $10,000 benefit amount is guaranteed issue, and the hospital recovery plan, the $200 daily benefit qualifies for guaranteed issue. So just to give you a little idea on how people are selling, and I was sharing this with Rob earlier, that we're seeing in today's business because of the whole challenge again of the employee retention and acquisition, that employers are getting their traditional renewal. In this case, here's a traditional silver plan, $3,500 deductible, $1,625 cost. Okay, these are rates from July of 2022 in the state of Ohio. Okay, $1,625. So we changed it. We raised the family deductible, but we added in the accident plan, we added in the critical illness plan, we added in the hospital recovery plan, and now there's $1,042 cost with a savings of $583. So the employer could do the traditional health plan, or you could reappropriate how things are done. Now again, what's going on here? The employer is changing the deductible. People are going to go $88,000. That's huge. Well, we're giving you an accident plan. We're giving you critical illness and hospital recovery, and we're also putting $600 a month into an HSA for you. So that $600 a month is going to come very close to helping pay for cash your deductible. So you have a way to reappropriate the dollars. And the good news is, and this is on the side of the broker, I'm a very much take care of the end user and everything else take care of itself type person. But in this case, obviously you're getting commission on 3, 4 products, and you're retaining your customer because it's a proven fact that the more products you have with your group health folks, the chance of losing them to a special deal or a great rate this year is going to diminish greatly because they have all these products with you. So really the ancillary products addition is not only good for your bottom line because you're creating more value and more income to your bottom line with not much more labor cost, but you're also securing your client relationships. That's critically important. Now let's talk about the guaranteed issue. So we will do groups of 3 to 9. I don't know of anybody else that will do that and provide guaranteed issue, but there has to be a 100% requirement and the employer contribution is 100%. So I'll give you an example. Someone contacted me 3 weeks ago. I've got 5 employees. I need to do something. So I ran a quote for $5,000 of accident, $200 a day of hospital, $10,000 of critical illness. The average age was 45, and the cost was $63 a month. So for those 5 employees, the employer paid $315 to provide those 3 guaranteed issue products to his 5 employees. And it was a no-brainer to spend $300 a month to help retain his customers who are his employees. And to use that as a way to attract new people because he can offer that to all new hires. Now, but the employer has to pay for that. Most employers under 10 that would have a chance to get a guaranteed issue product will pay for that coverage for their employees because there's no margin for error. If they would happen to lose a key employee at that point in time, it could devastate the company. Now, from 10 to 30, we need at least 3 applications of each product, okay, in order to provide guaranteed issue availability. The employer contribution is not required. Obviously, it would be nice for the employer to pay for enough people to get guaranteed issue for everyone. And I will tell you, in Kentucky and the state of Ohio, the minimum is 5. So the Department of Insurance, that's what they required. So in Ohio and Kentucky, which I know a lot of Cornerstone brokers reside, it's 5 application minimum. So the employer buys the plan. If he doesn't want to buy it for everybody, he buys the plan for his top 5 directors, managers, whatever, to make sure that there's guaranteed issue available to everyone. Of course, we all know that the employer contribution, the employer buy-in is really critically what's important to getting access to all the employees. So obviously you want to continue to drive that value and get them to participate in contributing something towards everybody. But to get guaranteed issue, 10 to 30, we need at least 5 applications. And then 30 plus, we need 10%. So for 10%, that would be, if you have 40, you need 4. If you have 50, you need 5. So there's not a lot, okay? So to be able to get guaranteed issue of these products with a very low participation numbers makes it very doable for most companies. And again, in this HR event I was in yesterday, the funny thing about it was that they kept on talking about how employers and HR groups have to start looking at new ways to be able to expand their relationship with their employees. And many of them were, it takes 90 days before you qualify for benefits. A lot of people are changing that to 30 days or immediately upon hire. They're doing creative things to be able to bring value to their employees. So this is kind of what's standard. Now, requirements for simplified issue. For number of employees, 3 plus, reduce only 3 applications, and everybody goes through. If there is no guaranteed issue, we need at least 3 applications to justify a list bill. Everybody goes through simplified issue. The accident's always guaranteed issue. The hospital, 4 questions with a 2-year look back period. The critical illness, 4 questions, same height and weight chart, a 10-year look back for some of the critical issues. And then obviously we're going to look at age, height, and weight, build chart, knockout questions. And that's how that works. So that's kind of where we're at. Now, I do want to show one thing that we created, and we created a one-stop shop for you guys to have successful end-to-end worksite sales and service experience with your groups. And I shared that with your management not that long ago, and I'm going to try and give it to you now and see if I can bring it into you. Here it is. Okay, so this tools is a landing page that has everything you need. There's stuff here that says why LifeSecure, personal accident insurance, critical illness insurance, hospital recovery. There's videos on everything. A webinar presentation bundling GI ancillary coverage with accidental worksite clients. On demand, higher renewal rates looming, try something different. Webinar resources. And then here, for use with a decision maker. These are all things that can be downloaded. Expand your employee benefits, build a better benefits package, product stuff for the accident plan. All these things can be, let's click on this and see what this does. So here is something that can be used to email all the employees prior to the enrollment. And this can all be customized down here. So if you're getting ready to go in and do your group meeting, so-and-so room at so-and-so time, blank, 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 you send this all to the employees in advance because the goal is to make sure that everybody is aware of what's coming. So we have this and different groups of this, different approaches and communication points for every product. Critical illness, hospital recovery. Now you've made a sale, what's next? Here's videos and PowerPoints on how to complete a group submission form, assisted online application, completing a self-serve online application, group submission form. So what happens is if you have a group, and I just had a group submitted to me, once it's approved, there's a group submission form that needs to be filled out. And this group submission form is going to tell us who, what, when, where, and how. Once we get that, we put that into our portal, it all gets logged in. And then when you go to take applications, if they're agent assisted, we're going to show you here how to complete an agent assisted online application. But depending on the size of the client, you might not have the ability to see everybody. So then you can complete a self-serve online application. So there can be a link that's done that the employees can go ahead and just enroll themselves. So obviously agent-assisted applications always come in higher than the self-serve online applications. But if you send out a good, better, best option, in most cases, those employees are going to pick the middle type plan. Then for you guys, there's an enrollment administrative timeline that shows you what to do in what step process, how to apply, a marketing map on how to follow through, customized marketing materials and education videos all available to you. Now what's for you? We have all these trackings on how to access the policyholder portal. Everybody that gets a plan with us can access the policyholder portal to check on their coverage, how to assess benefit administrators, view list bills, adding new hires, stuff for benefit administrators, stuff for policyholders, how to file a claim. It's all here. So you don't have to create any of it. It's all taken care of for you. So I think that's kind of important to look at all that and to realize that we've got it all prepared for you. The last thing I want to share with you, and this went all the way back to the beginning, is we're going to run through all this real quick. I hope you don't get dizzy, is I want to talk about this part of it. So I've been a broker my entire life. I sold individual and I sold worksite. And the companies that I used were ones that had good products that were easy to understand, provided good value. I also used products where I knew if I had a problem, I could talk to somebody and get an answer. I will tell you, I've been here for 7.5 years and never had a client ever call and complain about the service that we provide. Our agent support team is available 8 to 7 Eastern time, Monday through Friday. Our worksite team is available at the same times to be able to help. I'm available to be able to answer questions, and my phone's on me all day. If you call me after hours, I explained to somebody yesterday, I got a call at 7 o'clock at night. And why'd you take that call? I said, because if my client calls me after hours, it's got to be important. So I answer the question, help direct them on what to do. So I will tell you that the service with LifeSecure is second to none. So that's kind of the game plan of what we've done. Simple, fast, easy. Rates don't go up because you age. They're all portable products. They're all can be guaranteed issue with very little to no, hardly any participation. Do groups of 3 to 9, as low as 3 to 9. And they're simple one decision point products that work well. We are compatible with all HSAs. And I think if you start to use the product, you'll see how well it works. And the biggest thing is you're going to drive deep value into the relationships with your customers, which is really the backbone of all of our businesses. Our goals here are to retain our current business relationship and expand, and at the same time be able to service them in a very high quality way. And that's what we're going to do for you. So with that in mind, I will turn it back over to Rob and let him
Thanks,
finish
John.
things up the way they are.
Yep. So we do have a few questions here for you. First question is, it's actually kind of a two-part question. I can roll it all into one here. Do you work with any member associations? And if so, is it a full offering other than the worksite long-term care?
All right. So do we work with any member or associations? Yeah, we do. We can. The nice thing about the member and association issues is because everything can be done online and are individually owned, access to the products and being able to get to them and self-enroll is really important. So yeah, that's something that we could do. And what was the long-term care part question? I'm sorry.
It says worksite LTC.
Okay, so worksite LTC. Yeah, I don't know that we've. Well, I take that back. We just did the Airline Pilots Association nationally with long-term care, and so thousands of policies. So yeah, that can be done. Because of electronic access to everything. And because, again, a lot of those situations are not agent assisted, folks can get quotes sent to them with links to enroll, or they can have a link that's sent out to where people can self-enroll just based on how the association and the group is going to promote it. I mean, that's the biggest issue, and our worksite team will work diligently with that. So.
Perfect. John, is there a limited offering if we have a small group, like a 1 or 2 mom and pop shop, or is 3 the minimum?
No, 3 to 9 is the minimum, right? The 1 to 2 shop, and you got to understand that the rates, these are individual rates filed in the state of Ohio, so it's not like a true group product that you can manipulate rates and commissions and stuff. They are filed, the rates are what they are. So it'd be the same thing. You just go ahead and send them a quote for it, and the employer can still pay for it. This wouldn't be on a list bill. They just would get billed for the 1 or 2, pay for it themselves directly. And by the way, you don't have to use a list bill. I mean, we can have direct bill opportunities if somebody requires that instead of doing a list bill. It can be all be directly billed too. So.
Perfect. And final question as of right now. The critical illness benefit is 50% for a spouse. What if they both work at the same company?
Well, they both work at the same company. They could just buy an individual plan for each one of them, and that's what they would do. They wouldn't both go on the same plan, just buy an individual plan as an employee.
Okay.
Those are good questions.
As of now, that is the last question that I have. If anybody has any additional questions, feel free to reach out to me, and I'm happy to facilitate that. I'd just like to thank everybody for their time today. Thanks, John.
All right. Thanks so much, Rob. Appreciate it. Appreciate the opportunity to work with you all.
Take care, everyone.